Okay, we are live. Welcome, everyone. Thank you for joining us today for the second installment of the Prime Radar series. I hope everyone is staying well and safe during this lockdown period. My name is Connor Cowman, head of the research and advisory team here at Prime Philippines, and I'll be, of course, your host for today's webinar. So, today we are very fortunate to be joined by four esteemed guests for our panel discussion a little later on in the program, as well as Prime Philippines Assistant Vice President for Property Advisory, Mr. Jose Manuel Florencio, who will be giving the keynote presentation with information taken from Volume 1 of the Prime Philippines Compendium on Real Estate Intelligence. This will be available for subscription via the Office tab you will see on the right-hand side of your screen. So just to let everyone know, we do have the tab section just on this side there where you'll see polls and offers. These will both be used during the presentation. I'll speak a little bit later on about this. However, we will get straight into it. I would now like to give the floor to Sir Cholo for an opening message before we begin further.
Good afternoon, everyone. I'd like to welcome you all to Prime Philippines' second edition of its webinar series. Today, we will be talking about Volume 1 of a 3-volume publication to be released by Prime Philippines. Of course, this Volume 1 talks mainly about landlord-occupier and investor sentiments amid the current lockdown that we're facing, brought about by this pandemic, COVID-19. I guess now is a very good time for all of us to listen and share opinions and insights, so that moving forward we can learn from this and we can apply strategies and make a quick response and bounce back post-COVID. So I hope that everyone who is listening in their homes, all attendees, would learn a lot of insights that would greatly benefit their own organizations. Thank you, Connor.
Okay, thank you, Sir Cholo. Yes, indeed, we have some, as you can see, some of the biggest players in the real estate sector here in the Philippines with us today. We are very, very thankful for you all to join us today. And I would now like to give a further introduction to all our esteemed guests, who, as I mentioned, will be taking part in today's panel discussion. So I would like to start by introducing Mr. Wilfredo Pacino, Vice Chairman and President of Clark Global City, President of Udena Land Incorporated. Clark Global City, as we know, is an 177-hectare, top-notch smart city within the emerging business nucleus in the north, the Clark Freeport Zone. It houses major developers such as SM, Megawide, Dataland, among others, and Udena Land is the leading developer behind the 24-story LEED certified Udena Tower in BGC, Clark Global City, and in Pampanga and Calaca Industrial Park in Batangas. So thank you so much, Sir Freddie, for joining us today. It's a real honor and a privilege to have you with us today, and the audience and myself are very lucky to get to hear hopefully some fantastic insights from you. So thank you, Sir Freddie, for joining us today.
Yeah, my pleasure.
Thank you. Moving on to our second guest, Mr. Emanuel Rapadas, CFO of Torre Lorenzo Development Corporation. Torre Lorenzo Development Corporation, or TLDC, is one of the leading developers of premium university residencies, multi-use complexes, townships, and leisure destinations in the area of Batangas, Davao, and key cities in Metro Manila. So TLDC is the chief developer of Ciudad Township and Dusit brand mixed-use resorts in Davao. Thank you so much for joining us today. Again, we're very privileged and very happy to have you with us for today's webinar. So thank you once again for joining us, sir.
Yeah, good afternoon, and thank you for having me this afternoon.
Truly is a pleasure. Thank you so much. And moving on to our third guest, we have Andy Mark Valorente, President of Association of Mixed-Use Developers, Senior Operations Manager of JFM Development Corporation. Association of Mixed-Use Property Developers is an exclusive group comprised of major developers of township and integrated cities in Davao, such as Demosa Land, Danang Business Park, and Matina IT Park, among others. JFM Development Corporation is the leading developer behind Matina Town Square, which houses the Ayala Business Center, offering 7,000 square meters of office spaces in Davao City. Thank you so much for joining us today. Pleasure to have you here for this webinar series.
Thank you. It's an honor and privilege.
Yeah. Trust me, the honor is all mine. Okay, so moving on to our last guest, we have Mr. Wilfredo Saar Jr., President of Cebu ICT BPM Organization. Cebu ICT BPM Organization, or CIBO, is a premier consortium based in Cebu, comprised of more than 100 private and public businesses, support groups including the major ICT BPO locators and developers in the region. CIBO has been the primary advocate of the progressive transformation of the ICT BPO sector in Cebu. So again, thank you, Mr. Wilfredo Saar, for joining us today. And thank you to all of our guests who are here and all attendees listening. I hope you will enjoy today's webinar.
My pleasure to be invited.
Okay, thank you. So, right guys, so before Sir Cholo begins with the first section of the keynote presentation, I would just like to draw your attention again, like I did a minute ago, to the tabs on the side of the screen, specifically to the section called polls. This is where we will be posting multiple polls throughout the duration of this webinar, and we encourage everyone at home, everyone listening, to get involved with this. So you should see already, if we look to the side of the screen on the polls tab, very shortly the first poll will be put up there. Again, please vote. Here we go, here it is on the side now. Please vote, and we will be drawing the results of these polls throughout the duration of the webinar. Okay, so moving on, I would now like to go back to Sir Cholo for the first section of his keynote presentation. Sir Cholo, please.
Thank you very much, Connor. To begin with the presentation, let me just fix the slides here.
Okay. Just give, there we go.
All right, there we go. All right, good afternoon again, everyone, esteemed guests and all our attendees at their homes right now. So I will be presenting volume 1 of a 3-volume publication produced by Prime Philippines Research and Advisory Group. This volume, of course, is composed of insights of almost 500 respondents, of investors, occupiers, and our landlord clients. So to begin with, Philippine Real Estate General Business Overview. We start with the general business overview of our landlord clients. So based on the survey that we've got, our landlord responses indicate pretty much fair assessment of the whole situation. If you notice, 91 respondents indicated that they have either decreased or stopped operations, and about 16 has continued their operations. But basically, what we're seeing right now is a general fair assessment of feedback from the landlord clients that we have right now. We have a few who have experienced lease termination. About 12 of them have experienced lease terminations as requested by their respective tenants. Moving on. So for our current occupiers, we have, these are the tenant responses due to COVID-19 from our landlords, okay? So from a total of 137 of the respondents, we see 92 of them have experienced rental concessions from their tenant. meaning this pandemic has really affected a lot of tenants, particularly in the retail sector, where we have a lot of businesses operating in the non-essential industry. Then we have about 65 respondents who said that their operations have temporarily stopped, and about 35 have remained operational. These are primarily composed of the IT BPO sector, which, as you all know, they have been allowed to operate on a skeletal force or flexible work arrangements. Most landlords, of course, what they do is they, of course, give rental concessions, no, by way of rent-free months during the period of the quarantine, or spreading out and delaying off their payments from 1 to 6 months, just to give way for our landlords, tenants to really go through this crisis. As far as the inquiries are concerned, we see 70%, 72% of our landlords still feel that they have received enough inquiries. So this is a very good sign for our industry, especially for the building owners that we have, because in spite of the fact that we are experiencing this crisis, a lot of them have still experienced receiving inquiries, though some of them, of course, have had to put these inquiries on hold because of experiencing some skeletal work arrangements. They cannot go in full capacity. That's why a lot of them have informed us that they have put these inquiries on hold until such time that favorable conditions would allow them to proceed with their tenants. Moving forward, of course, for the office occupier, the business operation status. For the income loss of our landlords, we feel that about a total of 98% of them, of course, still feel that this is greatly affected. The COVID situation has greatly affected their income. About 7%, of course, only has declared probably no income, and the rest, of course, would continue to experience fair responses from their tenants. As far as the business operations are concerned, from a total of respondents, over 100 respondents, we see that the traditional occupiers and the professional services have greatly been impacted by the situation. Whereas as compared to the IT BPO industry, about 76% of our respondents from the IT BPO industry have said that they have still continued their operations. So it's still a pretty good sign for the office sector industry. Moving over to the income loss of our office occupiers. As I've mentioned earlier, the IT BPO industry still continues to be allowed to operate. What is affecting really the industry is basically the service offices and the traditional offices sector, because these companies basically were not allowed to operate. Majority of them, of course, would be expecting heavy losses, between 20 to 50% of their losses. And quite a few of them have informed us of probable wipeout of their revenues due to the closure of their businesses. Okay, so we also see operational constraints being affecting, of course, the non-essential businesses. As we see the number of respondents, petroleum and health and wellness industry are the ones that are greatly affected. As you all know, we have due to the lockdown, the transportation industry has been put to a halt, thereby greatly minimizing the demand of these petroleum companies, as well as our health and wellness companies, which comprise of the gyms and the service clinics. So these are greatly affected by the pandemic. F&B not too much, because we still they are still allowed to operate on a skeletal force for takeout and deliveries. So as I mentioned about the impact this pandemic has brought to the petroleum industry, especially our gas stations, 67%, of course, have responded negatively to the crisis. They report an estimated 45 to 55% income loss due to the lockdown. Food and beverage industries have reported 35 to 45% loss due to the lockdown. As you can see, majority of our respondents come from the health and wellness and retail industry, food and beverage. For the general business overview, just to give a recap, summary of landlord and our occupier respondent results. So for the estimated income loss, our landlord occupier, we see that among all these three, the landlord is the least affected by the situation because they are still able to get rental income from their present tenants who are presently still able to operate their own businesses. For between office and our retail tenants, the office occupier fares better because some of the businesses, especially the BPOs, have been allowed to operate, of course, with very limited capacity and with certain restrictions. The retail segment of our clients, of course, has experienced the greatest loss because if you are operating a non-essential business, definitely you would not be allowed to operate. So the retail industry has been greatly affected by this pandemic.
Okay. So, Charlie,
Okay. Thank you very much. That concludes section 1 of the report.
Okay. Thank you so much to Sir Chalo there. And as you said, that is the opening portion of the keynote presentation. We'll be returning to the second and third segment a little later on. Now, I'd just like to mention just quickly before we get into the panel discussion, we did, of course, as mentioned, do a poll during Sir Chalo's presentation, which you guys at home have been answering, and we do have the results in at this stage. We have 30%, which is a pretty high percentage of everyone who voted, saying that once the crisis subsides and the new normal in real estate business rises, in which real estate sector are you most bullish of? And residential condominium units has been the overall winner of that first poll, which I think for a lot of us won't surprise us, as I think many people, many investors in the real estate sector will be looking to cash in on the price drop that we're more than likely going to see in the residential sector. So thank you everyone at home for voting on the first poll. Again, we'll be continuing this throughout the webinar. Okay, so now let's move on to the much awaited panel discussion. With the first question, I would like to pose to Sir June. And that question is, from your experience, how is the ICT BPM sector coping with the current crisis in regards to what's the implications that the new normal in the ICT BPM sector, especially in operations and strategic expansions, what implications will this lockdown period have, and how are you currently coping during this crisis? So June, if you could please answer this question.
Okay, can you hear me now?
I can hear you, yes.
Okay, yeah, anyway, our experience in the IT BPM industry is that we're lucky we were allowed to operate. Most of us were operating, though a lot of the companies opted for work from home options. So that means they sent home their agents and they did the work from there. So that's about 40 to probably 100% of the companies. Well, the rest decided to stay in the offices because, of course, there were some limitations. The client does not allow bringing home the work to home, And also there were some areas wherein it was well supported by the Wi-Fi, or they don't have a good signal in their area, so they were forced to do it inside the office where you have it. So as a new norm, probably after COVID, there's a big chance that a lot of this work that were done at home during COVID will remain at home. Probably 30 to 40%, which is a significant part. And probably the rest will come back, but still it means that there'll be a lot of office spaces that will be opened up. But on the other hand, let me take you back to the year 2008 to 2009 during the global financial crisis. Our industry, the BPM industry, was the only industry that grew by double digit. Because after that, people were scrambling for cost savings. So that's why they sent work to the Philippines, which is definitely cheaper. So that is also a possibility that can happen after this COVID. But of course, it's difficult to support it with some facts. But it may counter some of the losses that we have experienced because of the business contraction of the existing businesses. So that's as far as the IT BPM sector is concerned.
Okay, thank you so much, June, for that answer. Yeah, I think a very resilient industry is the ICT BPM sector. As you mentioned in 2008 during the global crisis, where it bounced back quite substantially, then hopefully we will be seeing the same going forward after this lockdown period and after this crisis is over. Okay, thank you so much. And we'll move on to the second question, which I will be opening up to our other three panelists, starting with Sir Freddie. And this question is, considering that Metro Manila, Central Luzon, Calabarzon, and Davao City, of course, among other areas, remain under this ECQ, this enhanced community quarantine, until currently May 15, how does your real estate business adapt with the extended quarantine? And how do you see the current economic policies and virus containment measures regarding social distancing and limitations on movement further hampering the recovery of your real estate, or if not, in fact, improving your business?
Well, okay. Thank you. For our properties, for our assets, we are on standstill. Why do I say that? Because nobody really knows what will happen after. So what do we do now? Okay, we constantly engage with our customers, meaning our locators and potential buyers are supposed to have booked some sales with us by end of March. Okay, we try to understand their current situation. We want to see how they will evolve and do the deals that we want them to do with us come after the ECQ has been lifted. So continue to communicate. It's only after, okay, this lifting of the ECQ that we will know exactly what will happen. There are a lot of good suggestions, right? There are a lot of theories that has been floated around. Consumer preference will change. Even designs will change. So there's got to be a real market evaluation. Now, coupled with this, we in our space, we basically also do a lot of consultation, communication with our CDC, Clark Development Corporation, who is like the city mayor inside Clark. Right? So we are establishing the Clark-wide protocols, which everybody will have to follow. And with that, we have decided to come up with industry protocols on per company inside Clark. So we're getting ready. So we're putting things together to be presented to government so that we'll be ready when this ECQ is lifted. Now, I basically call that the rebound. my rebound theory. That is when we will really know where, how much, what will really happen. As of now, it's good to engage, keep on talking amongst people, industry players, customers within your companies. So that will basically spell out. All suggestions are good, everything, okay? But we will have to analyze this once we start opening. And lastly, I would want to specify that cash is king. So you've got to conserve your cash. So that's what we do in Udena Corp and Udena Land. Okay, so we can talk about more of my rebound theory later. I think that would be the second portion. Thank you.
Okay, thank you so much, Freddie. Yes, I think a lot of us, and even outside the real estate sector, are sharing the same sentiment. Very much a wait and see game at the minute, planning and continuing to talk to our clients during this period, ready for us to resume hopefully in Q2. Okay, so continuing on with the same question, Sir Noel, what's your sentiment on this? Do you share very much the same opinion of Sir Freddie in regards to keeping contact with your clients? How are you handling this situation?
Yeah, we agree with Freddie. I agree with Freddie. At this time, it's really time to listen to the market, listen to our customers, listen to the other players, because nobody has experienced this before. And it would be good to hear the views of the market players, the stakeholders in the industry. In Torre Lorenzo, this has provided us the time to reflect, reorganize, and re-strategize in line with the changes brought about by this pandemic. We have used this time to take a hard look on our business and identify opportunities to enhance and strengthen our processes, mainly our internal processes, so that we can be prepared for the post-pandemic normal. We're fortunate that even during this crisis, we still have a trickle of business coming to us. We're still experiencing some sales, and we take pride in being the pioneer in premium university residences. And it may be because of our strong corporate brand, it continues to be trusted in this particular market segment. The ECQ has put restrictions on many real estate activities, such as construction, selling, and day-to-day support and business operations. However, we understand that this is a necessity and we have to fully comply with and support government regulations. Also, we've used this time to look at, review our processes, and also to accelerate our own digital transformation. We even before the ECQ, we were already in the process of adopting digital transformation. This just gives us the opportunity now to accelerate that, no? And we've been meeting regularly, of course, via online with the rest of the management team. And the decision has been to invest in digital transformation, be more aggressive in investments in digital transformation. Yeah, we're looking at where we can fully optimize the transformation to help us to be more agile. I mentioned about processes. We've begun to identify which processes can continue to be done on work from home arrangements. We're looking at a maximum of 50% of our workforce going back to the office, even post-COVID. We're confident that a good number of the work that is currently done in our offices can be done in the homes. Okay, we've also focused on digital communications and marketing. We further strengthen our brand through expanded presence in social media and other online channels too, and ensuring that we have relevant and tone-sensitive content with our current and existing buyers. We're looking at flexible work arrangements, no? Contactless transactions for prospective buyers and investors. We make the entire, we will try to make the entire buying process digital from end to end, so that they can be, so that they can do every process virtually and remotely. So we also will be using the time to further improve on our property management advantage, which perhaps is one of our biggest differentiators industry. We in Torre Lorenzo have a long track record of providing top-notch property management, and we have further strengthened the safety and security of our residents and our guests during the quarantine period. We have seen how these new measures have been received, and we aim to continue this moving forward.
Okay, thank you. Thank you so much for your input there, Sir Noel. And we'll have to go for your sentiment regarding this, Mark. Are you, I mean, are you sharing the same sentiments in regards to using this time to polish up your procedures, keeping in touch with clients? Just a quick overview from yourself, Sir Mark, on how your business is coping and using this time.
Yeah. First, good afternoon, everyone. It's been a pleasure. So first, the impact of this COVID-19 pandemic is beyond unbelievable. Yeah. It's even beyond the 2008 global financial crisis. So if you ask me about Davao, here in Davao, I believe we are in a better position weathering this pandemic compared to, I believe, in Manila, for a number of reasons. Population here is not as dense as Metro Manila. So as far as food, we are food basket of the Philippines. And we believe that we also have a good leader that we follow, strong leader. So that's very important during this time of pandemic. So as far as our company is concerned, our company is a local developer of Davao. So we're basically engaged in leasing only. We don't sell, but we lease out spaces. Wherein 60% of our revenue comes from our commercial leasing, and 25% from industrial leasing, and 15% of that is from our residential. So our commercial leasing has been really been affected. In fact, we haven't been getting any revenue from that sector, because from the time of the lockdown, of course our tenants have been asking for concessions and deferment, and of course, in the spirit of cooperation, we extended some financial assistance in terms of deferment of lease up to 2 months, or until this ECQ is over. So that's our status right now. To say the least, it's really bad. So as of now, nobody can predict how long this pandemic is going to last. There's so much uncertainties, so it's really hard to forecast. So as a small real estate company, we will take more time. We will take a more conservative approach. And put all our major projects on hold. We will use this situation or time for strategic planning. As of present, our approach is wait and see because of the uncertainties. So for others who already started their projects, as you mentioned, I'm also representing other businesses here in Davao as the president of the AMPD developers. So as for others who started their projects already, I'm sure they can't wait to go back and finish their projects. So we're just waiting for the guidelines. So let's wait and see. So
Yeah, for sure.
as for the moment, what we did now is conduct a survey to our tenants. We ask these basic questions. Considering this pandemic or this health crisis, are you still willing to continue leasing with us? So, to my surprise, your survey is also quite accurate. Most of them want to continue leasing with us, but there's a but there. The remarks, they're willing, but they're asking for discount.
Yeah,
So what the outlook now as far as revenue is concerned, I'm predicting a 30% drop of revenue. Good thing we have these office spaces like BPO, who's less affected by this health crisis. So we're clinging on that department.
yeah,
So as
yeah,
far as retail, food, it's going to be it's going to be hard.
yeah. Of
So
course.
yeah.
Thank you so much, Mark. Yeah, there's for sure been an effect on us all in the real estate industry. However, it's great to hear that we're still using this time productively, and these are things we're doing now. We'll see us well into Q2 and the rest of the year as soon as this lockdown is finished. Okay, so thank you all so much for sentiment and answers and advice on the first question. I'll just quickly remind you that poll question 2 will be posted any minute now. So please do answer that like you did with the first one. And we will now continue with the second portion of the keynote presentation with Sir Chalo. Please, Sir Chalo.
Thank you, Connor. Thank you. So moving on to the second presentation.
Okay, I think we're just waiting for the slides to come up. There we go.
There you go. There you go. So Philippine real estate business outlook. This is the second portion out of 3 sections, as mentioned earlier. So we move on to the business outlook from our office tenants, year-end sentiments. As you can see, the status of year-long plans of our occupiers are really affected by this current situation. You notice that a majority of them really have really projected that their plans for expansion are really put on hold and reevaluation. A portion of them, of course, 16% are on hold, while a few, which is about 9%, have maintained that their current plans are on track. As far as the recovery period is concerned, we see that majority of them anticipate a recovery. 54% anticipate a recovery by the fourth quarter of the year. This is primarily, of course, led by the IT BPO sector, which is not much affected by the current situation that we're facing, primarily because the IT BPO sector has been prepared with their business continuity plans and contingency plans in such times of crisis like these. So we also see a 52% fair to optimistic view of the whole situation. On average, 4 to 7 months recovery would be enough for the sector to recover, as what majority of our respondents declared. Moving on to the retail occupiers. So for the expected recovery period of our retail clients, I think the recovery period for retail would be about 6 months on average. And 63% from the respondents that we've heard have said that they see a fair to optimistic view of the situation once we have handled the COVID situation well. Office recovery we see about towards the fourth quarter of the year. Majority of them have said that they are in a wait and see approach, depending on how the government handles the COVID situation. That's why 74% of them are really up for reevaluation, their plans for expansion. So in summary, all our respondents' year-end outlook, as you noticed, pessimism greatly, of course, outweighs the optimism. This is very understandable because it has been greatly impacted by the lockdown, limitation of people going out of their house because of the quarantine. And the general consensus mainly that we have received from our respondents, of course, their confidence has wavered in the performance of the Philippine market, particularly the property sector. For their expected recovery period, as I've mentioned, the retail sector foresees a much quicker recovery period as compared to the other sectors, mainly because they feel that once the quarantine is lifted, they can be, of course, allowed to operate on a gradual basis and, of course, recuperate from the losses that they have experienced. So that ends the second portion of the report. We move back to our panel discussion. Thank you.
Okay, thank you again, Sir Cholo, for the second section of your keynote presentation. A lot of insightful information given there. This is based, as mentioned earlier, on the extensive research conducted by the Prime and Research Advisory Team, which will also be included in our publication. Okay, yes, so as mentioned, now moving on to the second portion of the panel discussion. Just quickly noting the poll on the right-hand side, we have 31% of you saying expansion outside current central areas of operation put on hold. So worth noting there, I think a lot of people will agree with that. Okay, moving on swiftly. Again, I'm going to direct the first question at you, Sergeant. For over a decade now, the ICT BPO sector has been one of the most significant drivers of not only the property sector, but the whole economy, posting an estimated USD 26 billion worth of revenue in 29 alone. So my question to you is, how are the short to medium term plans affected by this crisis? And do you see the sector, as discussed earlier, growing at the same rate, if not faster, as it has in the previous few years? Yes.
Yeah. Anyways, as we have mentioned earlier, the new reality will be there will be more work from home. That's one of it. And the other one is that if the same thing will happen after the 2008 crisis, then it could mean boom to the industry. But I would say that the second scenario is still to be seen. I don't have research to back it up. It may or may not happen. And I would like to believe that this industry will continue to generate the income for our country. Because right now, as what is exactly happening, like in the case for Cebu, they're seeing some sites here in Cebu as a dumping site for works that are being done from India and even from Manila. And so far, they have been impressed with what they have seen. So I just hope that continues after the lockdown, that we will get more of these jobs. And probably there's also a chance that the industry will be more dispersed in the countryside. And we are very hopeful for that. Because just yesterday, I heard that one big BPO is considering the pop-up BPO operations in the different towns of Cebu. And it is experimental, so that means it will depend on the success of that experiment. But if that experiment succeeds, then that will be a very welcome development for the Philippine countryside.
Okay. Thank you so much, Sergeant, for that answer. And just quickly to all the panelists before we move on to the next question, would anyone like to give additional sentiments to what Sir Juna said there? Any just quick remarks in regards to this? Okay.
Oh, can I?
Please, Sir Freddie. Yes.
Anyway, I agree with June in all the talks we had, engagements with our customers, plus fellow other developers, that the ITBPO will be a V curve. So, point we're saying is that it will still be there, and I think you've got to not to discount as well the Pogo. Pogo is another potent market, just been driving the prices of the property for the past 2 years, right? So those are the two key industries that we're very confident. Even the big developers have said to me, yes, they are here to stay. Now, one thing important that we have to consider is, again, in property, it's again location, location, location. Now, we're fortunate that we're in Clark. We have a very supportive regulator there, CDC. We have all the infrastructure that not in any other place in the Philippines would have. And our proximity to Manila speaks for itself as well. Okay, so those are the aces that we have in Udenala. However, the rebound theory I was telling you earlier in the initial part of this webinar is how long will it really take, right? To get not to the normal, we don't expect that, but maybe to the subnormal. Okay, so that is a main consideration that we as property developers and consumers would want to take a look at. I go back to the theory of let's reevaluate what the market confidence has, okay? And if even we can experiment, that's even one way to do it, right? And once that's done, and then we decide, right? And scale down to our core competence in which areas we want to serve. And then let's integrate. Now, all these are big words, but it's best right now before the lockdown or the ECQ is lifted. But we as individual developers would already, internally, I think we've heard something from Tori Lorenzo going digital. Those are very good things, right? But on the business side, how do we drive it? I even heard something like with this lockdown, there could be a downturn on condominiums because people feel that they would rather have their bungalows, right? So those are good views also, but there will still be a demand for those condos, definitely. So all are good, as I said. Let's reevaluate, experiment, decide, and integrate into our business plans. Now, as even if you're a developer, if you're a buyer, you're in construction logistics, I think what has to be done here is for the national government. What I mean here is for the banking industry to support. The first thing that we have here is that the banks have a cap. They put a cap on property-related loans. Not everybody here basically funds its projects. Even the buyer for a house or a condo would go to the bank and borrow, right? They've capped it to a point that there is a cap on property, real estate exposure. Now, there's got to be a representation with the BSP or the Bangko Sentral ng Pilipinas to basically put this up or lift it. I don't know to what extent. There's got to be a core group to make representation, Department of Finance, maybe into BSP. Now, another thing that has to be done here, because let's face it, a lot of companies will have difficulty to start up again. Okay. Now, it will come to a point that the banks will, you remember, the Bayanihan law just tells us a deferment on interest, right? They didn't say it's interest-free. So come May 16, all these, the credit card companies, the leasing companies, etc., all of them will knock on your doors. Hey, guy, time to pay up. But you still have to gear up for that cash flow. right? So the central bank will have to pump in more stimulus to the banking system. But they won't do this, right? To give up a time frame on the rebound, right? For them to get back to their feet and generate the cash flow. If that keeps on piling up, then they reach a cap on property, right? So those things will have to be. That's the stimulus that the banking industry is waiting. It's not the interest rate to bring it down. No, it's basically how to create more liquidity, an extension on relaxation, maybe to relax some of the rules and regulations, which is fairly clearly defined. So I think it goes hand in hand. For the buyers, I repeat, to the developers, the contractors, the construction, the suppliers of this construction materials, cement companies, they're all closed. The distribution, the middlemen, they're all closed. See? So how do you restart? That is the rebound you're talking about. It's the end to end. As you build, as you purchase land, build it, develop it, construct it, build the building, and then sell it to the buyer. So that is something we in property cannot just do it on our own. But the banking system is an important tool in the toolbox.
Yeah, yeah,
We can't do without that. And they've got to change and support us in all this restructuring of the industry, for the industry cap to be lifted, things like that. It's
yeah,
not the interest rates. It's not that.
yeah. I think the support from the
All
bank.
banks are not lending now. Most banks are not lending. You have to queue up. They want to keep liquid as well. They put all their funds in GS. See?
Of
So
course,
they're
yeah,
waiting for the right signal because when they open in May 16, oh man, you can just imagine the
The
non-performing loans
line.
that the banks will be holding on.
yeah,
See?
yeah.
So how do
I,
you cure that? It's not bringing down the interest rates. It's giving them a reprieve. Hey guys, just like in 04, 05, 06, there was an SPV law that was passed. And we as property developers we should be in lookout on all of this because there will be some bargains out there.
mm,
There
Yeah.
will be some bargains out there. So
yeah.
I think that's
Can
all
I
that I
add
can.
something
Sure,
to that,
Please.
Honor?
Yeah.
Yeah, yeah. I agree completely with Freddie, because this is not an issue of solvency. What we're going to experience is a problem of liquidity, and it has to be a multi-sectoral approach to the solution of this, or to recovery. And if you look at the current government pronouncements on the economic recovery program, there's so much that we can still do. If you look at the budget now on this pandemic, anywhere between 200 million, and I heard some legislators pushing for 700 million. That's really just between 1 to 3% of Philippine GDP. Vis-a-vis our neighbors, for example, Vietnam is so much more than us. They're, I think, pushing for in the low teens. No, even Singapore is doing, I think, investing 16% of its GDP for the economic recovery. So yeah, government and private sector will have to contribute here. No? The banks will have to contribute their share. And the Philippines is, I think, in a unique situation. We're in a position of strength to fund this recovery program. Look at our GDP, debt to GDP ratio. It's about 41.5% versus our neighbors, which is 60%. Now, so there's so much that we can still afford to.
Yeah, agreed. And do you know what? We'll just round this question off. So, Mark, I just want to go to you in regards to, of course, considering the recent disruptions in the property market we've discussed. How would you adjust your development and existing and upcoming projects and so forth to the so-called new normal? Are you looking into digitization of operations, flexible work arrangements? How specifically to your business are you looking to adapt to this period?
Well, to be honest, as I've said a while ago, nobody can predict how long this pandemic is going to last. There's so much uncertainty. It's so hard to forecast. So all projects are on hold. So yeah, we're looking deep into our cash flow as to how much we can afford, how long can we survive. So to be honest, we're just trying to survive here, really. So yeah, I agree with Sir Manny and Sir Fred there. The bank's going to be a big factor here. So we have obligations to our creditors, and we're concerned with that. Everybody here who who owes bank some money are very concerned with that. So yeah,
Okay.
so
Yeah.
it's on hold as far as our concerned.
Okay. Okay. Hello, Sir Mark. And can we still have the audio?
Hello.
Hello.
Yeah, hello.
Hello.
Did you get it? Yeah.
Yes. Yes. Can hear you now. Yeah. So I just round off on that point again at the end there, Sir Mark. I think it was missed due to issues with the connection there.
Yeah. As I mentioned, all our projects now is on hold. So it's fortunate that we already finished our previous project. So we don't need to. But other members of my group, they are about to finish their project. So as I've said a while ago, they can't wait to finish their project, and hope they can finish their project. So that's a growing concern. So yeah, so
Yeah.
I think with this, we're transitioning to GCQ. Constructions will be allowed to operate again, I think. So they're very can't wait to finish their project. Yeah.
Yeah, I'm sure. As I'm sure we're all the same. We can't wait to get back to the projects we had outgoing before this lockdown period and get back to completing work after the lockdown period. So okay, I'd just like to give a chance just for a minute or two, just a quick add on if anyone of the other panelists would like to comment on the back of what Sir Marcus said there. Is there any closing comments from any of the panel in regards to Mark's comments, or can we move on? We're okay? Okay?
We're okay. Yeah.
Okay. Thank you so much, Sir Mark. Thank you all our panelists for answering our second question. Okay. Again, we have another poll coming up on the right-hand side. I won't dwell on that too much. As you guys can see, it just continues to answer this throughout the duration. Okay, so let's go back to Sir Cholo, the third and final section of the keynote presentation. Sir Cholo, please.
Thank you, Connor. Thank you, everyone, for your very insightful comments. So moving on to the last section of the report. So lastly, we take a look at the property acquisition responses from our client investors. So we see a current market for land acquisition. Here we would like to take a look at buy-sell quadrant chart that we have prepared. Right now, based on the responses that we have received so far, 40 to 60% of our respondents feel that we are currently in a seller's market, meaning they have certainty of buying. They are sure that they want to acquire more properties, but are very unlikely to sell their own properties. So meaning currently what we're facing right now, as what we've heard from our clients, is we are in a seller's market. The ideal situation where we would like to be, of course, is the balanced ideal scenario wherein we have stable sellers and we have stable buyers willing to sell and acquire more properties. Similar to the previous chart, of course, you see where the dark portion is where the likelihood of our clients to buy. And then it's also, of course, where the unlikelihood of our clients to sell. So meaning we are currently still in a seller's market right now. 77% of our clients are likely to buy. And then 73% from the respondents are unlikely to sell. So that's a good sign right now. So given that, all situations, I think we are unlikely to really go through a shift to a buyer's market unless, of course, there are large movements in, of course, the situation that we're having right now. We feel that we are very confident that we will be able to retain the seller's market right now. So for land values, prices. So during the early quarantine period from March to April, we see 63 of our respondents say that they experienced little to no change in the property prices of their properties at hand. That comprises to about 56% see no change. And then 17% of our respondents see a decrease in prices. About 14% from what we've heard, they are unsure or have not checked yet if the price of their properties have changed. Right now, land values remain firm. Owners are really in no rush to sell their properties at the moment. Moving on. So for acquisition plans for the year, so we took a look at our clients' perceived delay in investment plans due to the current pandemic. We see about 40 willing to delay between 4 to 7 months their investment plans. And then about 35 of them are willing to invest in the short term. Only 8 of them are really on track to acquire the properties that they are currently negotiating. But most of them have responded with a wait-and-see approach due to, of course, we've always mentioned the uncertainties that is surrounding the industry right now. On average, we see our clients are likely to purchase properties within 2020. That is on average. They are most likely to acquire properties because they feel that the market is strong enough at this point to continue on with their plans. So for the investment locations, you see here, our main points of interest, basically from the responses that we have heard, are 20% from the respondents, the investor respondents, are willing to invest in Visayas as their priority area. Of course, we have Manila, Cebu, Iloilo, Bacolod, and Davao as the primary locations of interest from the investors that we have. If we talk about the island group, of course, as expected, 88% of our respondents out of 112 have given preference to Luzon, followed by Mindanao and Visayas right after. With regards to expansion priorities of our clients in Luzon, you can see there, of course, Metro Manila still leads the way with 76 respondents, followed by the Calabarzon area and Central Luzon. We all know recently the government has launched the Balik Probinsya program, which I hope would really decongest Metro Manila. This is to encourage development outside of Metro Manila, to bring more people and to spur growth of development outside Metro Manila. So the top three destinations are Metro Manila, Calabarzon, and Central Luzon. Speaking of Luzon hotspots, so as earlier mentioned, the top destinations or locations to invest in from the investors that we have talked to, they rate Calabarzon as number one, primarily because of the scarcity of land in Metro Manila, and of course the value of land, which is greater, of course, in Metro Manila as compared to the Calabarzon area. We see Calabarzon as, of course, the center of manufacturing, warehouses are there. We see Central Luzon as a good destination, expansion of commercial activities and investments. That being where the location of course, where Clark is as one of the major destinations of investments so far from our investors. So as far as the acquisition interest meter by Island Group, of course, we still see Mindanao as having quite fair of interest, Luzon at 45% coming in next, and then Visayas 31%. So we see a slight interest in these locations led by, of course, Mindanao, because we see a lot of investments due mainly to the fact there are a lot ongoing infrastructure developments in the area. But our clients have indicated to us that they are also in a wait and see as far as Mindanao is concerned, because they want to know and see the progress of the infrastructure developments, particularly, of course, the Mindanao Railway system. Okay, so we've also prepared a 2020 bull bear meter. Of course, bullish means inclined towards the more optimistic side, and bearish, which is inclined to more on the pessimistic side of the market. You'll notice a lot of neutral leaning towards the bearish. Notice hotels are greatly affected by, of course, the travel bans. A lot of clients are in a wait and see approach, but the overall trajectory we see, if we assess all and review all the response that we have received, is trajectory is leaning towards the bearish market, primarily because investors are really waiting to see how the Philippine government really handles the current COVID situation in our country. We're all hopeful that this COVID is contained sooner rather than later. So most of these investors are really to continue on with their plans of investments. For 2021, most of them are generally optimistic with their projections. Most of them, though neutral, we see residential subdivisions and condominiums as more leaning towards the bearish side, while industrial and leasing activities of land are more leaning towards the bullish side. But basically, they all remain in the neutral side as of the moment. That ends the complete presentation of volume 1 of the report. I hope you all learned some valuable insights that you can apply, of course, to your respective businesses. Thank you.
Okay, thank you so much, Sir Cholo, for your 3-part keynote presentation. Indeed, a lot of interesting information and advice which again,
Mhm.
I would like to know will be included in our publication, which you can find on the side. Okay, and we now have Sir June back with us as well after a short absence. So I would just like to ask quickly, we have the poll results on the side here from our latest poll, which is given the proposed BPP of the government, whose main objective is to decentralize and decongest Metro Manila, which real estate hotspots are you willing to invest in within 2020 and 2021? A massive majority, as maybe expected, have gone for Greater Metro Manila. Let's just go around, but literally 30 seconds each person. Just do you, Sir Freddie, do you agree
Uh,
with the poll results there?
um, it will definitely gravitate towards Metro Manila, right? I think that's key. You can't do much about that, but that's how it is. Center of government is here, center of commerce is in Manila. So it'll be around that. I'll be biased, of course, Clark would be the answer there, right? It's just a few minutes, and we all have the infrastructure, airport, the rail, the best highways in Clark. It's just what 45 minutes on a good time to drive, right? So
Yeah,
I think that's key. I think that's even my distinct advantage is vis-a-vis, and maybe my price is cheaper, etc., etc. Our price is cheaper in Clark. But having said that this is all being dictated. Where to buy, what to buy, it will be dictated by the bank financing availability. Don't miss the point. Nobody would want to buy 100% equity. That's crazy. The ROI will be how much, right? The payback. So 70-30 ratio, I think that's good. So it will all depend. And let's face it, there will be a correction. There will be a correction. How mild, how heavy, I don't know, but there will be a correction.
yeah,
Because as we have said, no, people with our own standstill, we don't know what to do, how long, etc. How do we go back to the mid normal, things like that. So let's be cautious. Keep your cash. Cash is king. Keep
agree.
on talking, keep on talking, talk, communicate internally with market players, with the market, with government. That's very important. And
Agree.
once you hurdle this, rest assured, we go back to the heydays. Yeah,
Yeah.
go back to the heydays. Yeah.
Yes. I mean, personally, I love also going to New Clark City. It's so clean and open down there.
I
So,
haven't seen you there.
well, as soon as I'm allowed to leave the
Sure,
house,
sure, sure. Give me a call.
um,
Everybody's invited, by the way,
sure. Let's
when the
Thank you.
lockdown is over.
once this is over for sure.
Yeah.
Thank you, Sir Freddie. Again, just a quick sentiment from you, Sir Mark, regarding your thoughts on the poll. Just a quick 30 seconds as we're running a little behind. What's your thoughts on this?
Well, my thoughts is this pandemic made a big distractions in the property sector, no doubt. But this is the time that we help one another. To be honest, we are happy now just to make break even and maybe a little bit of profit, just a buffer maybe. So we are willing to extend as much help as we can afford to give to our tenants. This is our way of helping them get through this difficult time. As to how long can we sustain this, I cannot really, but we cannot sustain this for long. So you have to help one another on this. It's not just the landlord who's going to bear all this burden, as what Sir Manny or Sir Fred was saying. The bank should also help us. You know, there's a growing concern among developers here on paying their creditors here. The central bank announced some interest. They bring down their interest rates, but the banks are not following those interest rates for some reason. So yeah, so I wish everybody good luck and stay safe, everyone.
Yeah, agreed. Yeah, we're all very much in this together. And yeah, so what I'd like to do now is, first of all, thank you all for joining in, and we will close with some final remarks, if you would. I'd just like to give you all just maybe 2 or 3 minutes each on what advice you can give to the real estate landlords, occupiers, and investors, and to everyone out there who has listened to today's episode. What advice can you give to them in light of the current crisis? We'll go to you first, Sir June, if you could give your sentiments regarding this. Hello, Sir June. Hello.
Hello.
Okay.
You want me to go first? Okay. Definitely from this pandemic, a new economic world order will arise. So we have to be ready for the new norms or the new standards of tomorrow. And it will need also the creativity of our developers to catch the imagination of the new market. So I know this will be a very big adjustment, but of course, with the cooperation of everybody, a big task can be made easier.
Yeah, I agree 100%. As I said a minute ago, we are all in this together. So the things will change. We get through times like this together. So let's go to Noel next. Again, following the same theme. What's your overall advice to anyone who's at home listening, landlords, occupiers, whoever they may be? What would you say to them on how to move forward and what's going to be expected due to this lockdown and COVID-19 pandemic?
This pandemic has brought about a gloomy environment for everybody. But there are silver linings. I'd like to quote one of my directors in our very first meeting after the lockdown. And he challenged management by saying, this crisis is too precious to waste. There are opportunities and lessons that we can learn from this. And the thing to do at this time is to focus on what those silver linings are, what those opportunities are. Bear in mind that real estate is a long-term play. From the time you buy property to the time you turn over takes you anywhere between 48 to 60 months. And the landscape would have changed dramatically from the time you acquired it. Even the most conservative economists and world health authorities are saying 2023 seems to be the point when things would have gone to the pre-COVID, pre-pandemic levels. 2023 is just 3 years ago, and there's a lot we can still do. But again, let me repeat the challenge posed by my co-panelists, that this thing has to be approached by all sectors, primarily government and the financial services industries. For property developers, again, this is a time to take a look at what you can do despite the challenges. There are opportunities. Government has said they will lower interest rates, and in fact they have. The banks have not moved because they have put a risk premium, which practically negates the lower interest rates that government has mandated. But pretty soon, I feel that they will comply. They need to cooperate, otherwise we all fail. We should learn from the lessons of the 1920s depression, where the banks just fended for themselves and caused the economic collapse of the world. If we use those lessons well, we will come out of this well. For investors, this may be the time for you to look at bargains, good deals. In the Philippines, we have and we will always have the demographic advantage. 3 years from now, the buyers will still be there. The Philippines in the last 2 decades has experienced above 6% GDP growth, one of the fastest growing economies in the world. There is no reason we cannot go back to that precisely because of the demographics. To the people in the real estate industry, let's look beyond the challenges in the next 12, 24, 36 months. But rather, let's take a look at what it can be harvested beyond this crisis. And this will only happen, again, if everybody cooperates.
Agreed. Yeah. Once again, I'll reiterate: we're all in this together, right? We're all experiencing the same lockdown, the same pandemic. So it's about how the industry as a whole moves forward together. On the back of this, Sir Freddie, I'd like to come to you just for your closing remarks on what advice you're going to give to the listeners out there.
It will be driven by the policies by the banks. I think that's where it's headed towards. Okay, the central bank, it's not only interest rates; it's a stimulus today, because you bring down the interest rates. You're telling the banks, central bank telling the banks, "Oh, I brought down you better borrow from me now so that you can relent." But they don't know who to lend to. They're freestyling. They have enough liquidity. Don't get me wrong. The banks have enough liquidity to lend, but they're just keeping it because they don't know how their balance sheet will be hit once they start opening in May 16th. That's why we need drastic and quick policies, which the central bank, we direct that, okay, we agree to this, you can do this, you can do that. Remove the cap on property, that's first and foremost. Go to the banks and they tell you, oops, I'm sorry, my cap is already hitting the limit. That is very key for our business, because they bundle all property-related businesses who go to them to borrow. That's one. Second, on the restructure, on the extension side, the rebound time. What can the banks give us? Right? They will still have to collect interest. They just did a deferment. Are they willing to extend it further until we create our cash flow? That's second. Now, as I told you earlier, there are bargains. There is light at the end of it. They're very good. You just have to be creative. There are so many things that come in. Zoom, ang dami. There's a lot. There's a lot out there. I can, the IT segment, the work at home, flexible offices, etc. There's a lot. So the thing is, continue to communicate. Open your doors. I said the 2 C's. I said, communicate internally, externally. Your stakeholders, your customers, to your regulators, okay, internally. And lastly, cash is king. Stay liquid, guys. Don't rush on investments. If there's a 30 cents to $1, why not? But that will come maybe, I don't know. Just relax. Ride what I said earlier on, ride the tide. See, ride the tide.
Yeah.
Ride the tide on the rebound theory. I repeat that, okay? This is key. Okay, reevaluate, experiment, decide, and then integrate. How long? I don't know. Good to say anybody's day.
Yeah.
It's the rebound. How do we ride that? Good luck to us, guys.
Yes,
and to all listening, good luck to you guys too.
I agree, and I think it's fair to say, with industry leaders and experts like the likes of who we have in here today with our panel discussion, I think we're in safe hands. And I agree with everything that's been said here in regards to the closing remarks. I would also like to add a sentiment shared by the Prime Philippines CEO and Managing Director, I'm sure you know, Mr. Jetson Yu, said to me recently, don't waste a good crisis. And I think that's very true. I think there's a lot of opportunities that will arise. I think there's a lot of potential areas to capitalize on for the real estate market. It's about how we move forward together. And also, as Sir Freddie said, I think cash is king. Let's ride the wave. Let's see what happens with the rest of this lockdown. Hopefully, we'll all be back in our offices come the 15th. But I don't like to predict the future. However, I think, yeah, as mentioned, there is a lot of positives to come, and I think that's been highlighted by our fantastic panel of esteemed guests today. And I just want to just finish on so June, do you have any closing remarks? I don't think we heard anything from you in the end there. Anything additional to add, Sir June, or are we all happy?
Just one last remark.
Please.
I think the world has seen the worst in the 1918-1919 Spanish flu pandemic. It killed 50 to 100 million people. Then it was preceded, of course, by World War I, and followed shortly, well, after it, the Great Depression in the late 1920s. And now with all this experience, plus we have better technology, so I don't see why we can't make it through.
Yep, and once again, I couldn't agree more. And as highlighted again, now is really a time to strategize, to plan for how we're going to move forward after this pandemic. It's not a time to sit there and feel sorry for ourselves that we've had this happen to us. It's happening to everyone. And it's about how we continue to move forward. And as mentioned, for everyone out there listening, please take on the advice given today, because the people we have on this panel discussion are genuine industry leaders and experts, and everything they've said today here will be very important, not only for themselves, but for anyone that takes it on board moving forward. So that concludes our panel discussion. I would once again like to thank each and every one of you for joining us today. It's been an absolute honor and a privilege to host such esteemed panel guests for our second series of this Prime Radar webinar. I would also just like to address all the attendees, all the viewers out there, and thank you for joining us again today. Thank you for answering the polls. We will be potentially posting some of the results for these on our social media pages afterwards for you to have a look at. However, please make sure you do follow the Prime Philippine pages on social media for updates on the next webinar, where we'll have more fantastic guests and panel discussions such as today's. And I'd just once again like to remind everyone that on the offers tab on the right hand side of the screen, you will see our publication. Please sign up. There's 3 volumes giving details, including surveys we've conducted and some of the information that Sir Cholo shared in his keynote presentation today. So, okay, fantastic afternoon, and I once again just want to end by really thanking each and every one of you for taking your time out of your lockdown schedules, whatever that may be, to come and share your sentiments with us today. And I hope you all stay well and safe, and hopefully we can all see each other in Clark City for a party after the lockdown is finished.
Thank you very much for having the time.
And
Thank you. Keep safe. Keep safe.
Okay, take care, everyone. Goodbye. Thank you.
Thank you.